Welcome to the Note Nuggets podcast, where you can learn how to become the bank, build wealth, and accumulate streams of income perfect for your savings or IRAs. You'll hear from industry experts, seasoned veterans, and everyday investors. Our goal is to teach you how to invest in notes, one nugget of knowledge at a time. Here's your host, Kevin Galang.
Welcome, everybody, to another episode of the Note Nuggets podcast, where you learn how to turn other people's debt into income for your savings or IRA. Note investing has many advantages that other asset classes do not. No maintenance, no tenant turnover, and an investment secured by real estate are a couple of the benefits of being the bank. If you're new to note investing, first of all, welcome. Now, if you're on the fence about whether or not to become the bank, check out a recent podcast I did that discusses how to think about whether or not notes are right for you. If you want to check that out, head over to notenuggets.com/invest. Now, what I love about real estate investing is that there are so many ways to make money. Even after you decide to specialize in a niche asset class like notes, you'll realize that there are tons of ways to produce profits as the lender. Now let's talk about deals for note investors. Like other asset classes in real estate, there are many ways that you can find notes. In fact, you can even create your own notes. That's what I did with my self-directed IRA. Who needs a 401k anyway? I'd rather have 401 Kevin. Get it? Well, okay, I'll admit, that was a very bad joke, but thanks for humoring me. Anyways, I digress. With multiple ways to either buy notes or create notes, it's important to be able to spot a bad note deal. Oftentimes, investors will ask me whether or not this note is a good deal, or whether or not they should buy it. I'm quick to say that it doesn't matter what I think, because it's all about what fits their investor identity and what the math tells them to do. What I will do if you need help trying to figure out if this investment is right for you, I'll try and figure out the numbers with you to make sure that you understand how to calculate the math and let the math tell you what to do, whether to pull the trigger or not. Take the emotion out of it and let the numbers do the talking for you. What's a good note for me may in fact be an unfavorable note for you. However, there are consistent signs of a bad note deal, and that's what our guest today is going to share with us. Before we learn about our guest, please don't forget to leave us a review on Apple Podcasts so that the podcast can reach more like-minded people like yourself. So let's learn about today's guest. You might know Rob from U.S. Mortgage Resolution, where he has played an instrumental role in the development of a premier distressed debt investment firm. Rob handled pricing, due diligence, asset management, sales, and resolutions for over 10,000 loans over his tenure with the company. In 2017, Rob launched Fix Notes LLC, where you can find them at fixnotes.com, with the goal of building one of the strongest brands in the secondary mortgage market. Fix Notes offers the highest quality, most comprehensive mortgage note-related content in the industry, all for free. And as of 2020, you can find Rob live streaming his weekly real estate show, Be the Bank, every Wednesday, 1 p.m. Eastern, on Fix Notes' YouTube channel. So could you break down or tell us about, in your opinion, what an illegitimate note deal would be?
Sure. So there's really one big thing that you can do to avoid getting yourself into situations like that, and it's to check the public record for the assignment of mortgage. And really, that's going to be the main key to determine who owns the debt, who's the decision maker, and am I talking with the right company to actually make a deal happen. If the assignment of mortgage is not matching the company that you're talking to, and it's called the assignor and the assignee. So the assignor transfers the debt to the assignee, and if that assignee is not the company selling the loan, then you're going to have to ask whoever brought you this deal, who's actually selling the loan. And eventually in some cases there'll be these broker daisy chains and wholesalers trying to connect other wholesalers, and it kind of is an endless loop of people trying to get a deal done. And that deal will never happen. At the end of the day, you really need to be in communication with your principal seller or as a buyer. And when I sell loans to buyers, I can't really sell through brokers, or they're not really called brokers because they don't have licenses. They are like wholesalers. And to communicate through a wholesaler to an end buyer, it just doesn't connect. There's always a missing circuit there, and a deal's not going to happen. So right away, check for the assignment of mortgage. I would say another thing that's an easy way to gauge the legitimacy of a seller is to ask them if they would consider using an escrow agent or a bailee letter to close the deal, subject to review of the collateral files. And if that company, the seller, has all of their collateral files in place, then they're not going to have a problem with sending those files to a third party to verify before funds are released. But a less legitimate deal, the seller might have no intentions of using escrow because that maybe would show that the docs that they hold are not in order, not complete, or maybe they don't even have docs. So I would say for a first-time sale, first-time deal with a new seller, you'd want to ask that and potentially use it going forward. Or once you get a few deals under your belt, you could be comfortable with it going forward.
I like that. So there's a lot that you said there, but especially the subject to, and the equivalent there would be is if you're buying a house, right, you may make an offer and say contingent upon this or pending the inspection. It's the same concept. So just because you're dealing with a different asset class doesn't mean you shouldn't have those same principles. So that's a very good advice. No,
it's a good point because note deals tend to happen a lot faster than a traditional real estate deal. I did in July, we closed $1 million trade. I sold $1 million of assets, and from start to finish, it was less than a month. And that included all the due diligence and all of the vetting. We did a lot of deals with that buyer before. So in that case, they were already comfortable and kind of went over those first few hurdles. But that's pretty quick for $1 million transaction. On smaller deals, it's like 10 days, 14 days, 2 weeks to get a note deal closed. So in that amount of time, there's a lot that you need to do, but you shouldn't consider it less formal and less important than a traditional real estate deal. So I would say to document everything when you send in a letter of intent, your LOI, which is your indicative offer, to make sure that you include those caveats that you're still subject to the research and due diligence that's necessary to finalize the deal. So you can start that process with a backstop, with some ways out if something were to go wrong. But if you're documenting it and your letter of intent clearly states to the seller what to expect, then you're not going to cause any hard feelings for backing out of a deal because of something that was identified early on. Where you can get into trouble is if you make an offer and you either don't follow through with the due diligence to show that there was something of an issue to pull out from the deal, or you just don't do what you say you're going to do. And one of the questions you sent me to prompt for this was about how you can, social responsibility and working with legitimate people. I mean, at the end of the day, do what you say you're going to do, whether that's with a borrower, an investor, a client. It doesn't matter who, as long as you're making sure to stand by your word. That's everything.
There are many bad deals out there, but now I hope you're better equipped to spot them. For access to my full interview with Rob and to learn more from him and his years of experience, head over to notenuggets.com/signs. And if you have any questions about note investing or need help with due diligence, shoot me an email at kevin@notenuggets.com. Thanks, everyone.
Thank you for tuning in to this week's episode of the Note Nuggets podcast. Be sure to subscribe to the show to get access to additional weekly value nuggets and get notified with episode updates. To subscribe, all you have to do is head over to subscribe.notenuggets.com. If you have any questions about this episode or note investing, book a time on Kevin's calendar at contact.notenuggets.com. We'll see you next week with another note nugget to add to your tool belt.